We're coming for today's session. We're going to look at our group account or group consolidation concept, and we are going to dive into a question. We're going to dive into a question that was tested in December 2021. And specifically, it is question number 4. Question number 4. And as I can see from the chart, that everyone is able to get that question. Everyone is able to access that question, and this is the question. It reads, I can read a question for you. We told that on 1st January 2021, Lag Limited acquired the following in Zuri Limited: 80% of the owner share capital of Zuri Limited for 25,60,000. 20,560,000, half of the 10% debenture in Zuri Limited. And then we are told that the summarized financial statement of Lag Limited and Zuri Limited, year ended 30 September 2021, were as follows. You are given the financial statement for the two companies. That is Lag Limited and Zuri Limited. Now, I want somebody to remind me, when we're given a good question, what is our start point? Somebody is reminding us here, when you give a group question, what would be our start point? Starting point class in the I hope somebody is typing group structure there. That is very good. Yes, our starting point is to identify which kind of a company that we are dealing with. And in this case, I'm told that Lag Limited acquired 80% of other share of Zuri Limited. So Lag Limited in this case will be the parent company, and on the other hand, we shall be having Zuri Limited as the subsidiary. Zuri Limited will be the subsidiary. So this company will be the parent company. This will be the parent company, and we shall be having Zuri Limited as a subsidiary company. And remember, class, today what I want us to look at is how do we compute goodwill. If you really looked at that inventory, the topic was on how to compute goodwill. I will emphasize on how to compute goodwill. That is what I'm going to emphasize on. Now, I want us to look at the acquisition date of acquisition, and then date of financial reporting. When did Lag Limited acquire this Zuri Limited? You got that question. Everyone is having the question at blueprint. Kindly share. I don't know whether most of us have that paper. Blueprint, you can share. On 1st January 2021, Lag Limited acquired the following in Zuri. So on 1st of January 2021, that is a date that which Lag Limited acquired what? The subsidiary company, which is Zuri Limited. What is our date of financial reporting? Somebody, date of financial reporting. Can you give me the date of financial reporting? When are we consolidating? When are we reporting this? Or when will the parent company report this? You go direct to the question. You go direct to where now you are told to prepare, required. You go where you have required. And just rush there and see your required group income statement for the year ended 30 September 2021. 30th of September 2021. September 2021. I can see we're dealing with the same year. The acquisition was in between the financial year. So I want somebody else to tell me what was the start date of this financial year? What was the start date of this financial year of Lag Limited? Because now we have identified that Lag Limited will be the parent company. And Zuri Limited is a subsidiary as far as this question is concerned. What is the start date of the financial year of Lag Limited? I told you very well that you start here. This is the date of financial reporting. Today is 30th of September 2021. What will be the date tomorrow? What will be the date tomorrow? I like what people are telling me that it will be 1st of October. This is date of start date of financial year. Start date of financial year is 1st of October 2020. Now it will be 2020. Thank you so much. Through solution 3. That is very good. I'd like to know what you deal with. I could support you to a solution. So that is the start here. That is the starting. So the major thing or the major point here class for us to identify this, remember it falls under group structure. I want to know after how long or for how long did we stay with the subsidiary company? For how long did we stay with the subsidiary company? So it's good to note this is at the end of September, and this is at the start of January. So for how long did we stay with this subsidiary company? For how long did we stay with the subsidiary? I like what Matunda is telling us here. Leonida Matunda here, anatuambia kwamba it is 9 months. 9 months. These people are good. I like the journey that we are moving. I like the journey. But there are some people who are not talking to me. I don't know why. Just type. Or they don't understand. Unless you are not in our classes. Yeah, remember, we have been doing this. So from 1st of January 2021 to 30th of September 2021, that is 9 months. 9 months. So that means we have stayed with this subsidiary company for 9 months. There any item of the income statement, that is, may it be revenue, may it be an expense, it should be prorated. It should be prorated by 9 over 12. It should be prorated by 9 over 12. So if we are to prepare now the pro forma, you just have your items here. You take the 100% of the item of the parent, and then you take 9 over 12 of the item of the subsidiary. I would like to know whether we are together at that point. I would really like to know whether we are together at that point. Are we really together? It is a step-by-step thing here. Step-by-step. Great. Now, class, I want to go to additional information. So that I'm able to compute goodwill. So, additional information. Run on a straight line basis. Kwa sababu ni hii. Network. My network. Okay, sorry for that. Robinson. My network. Inataka kulipa tax. Oh, sorry for that. What should we do? Corporate. Let me see. Okay. Okay. How is it now? Are you able to hear me clearly? Okay, clear now. Asante. I was saying that kwa sababu ni nini, let me guide you through here. Let me guide you through here. The fair value of the assets of Zuri Limited at the date of acquisition were the same as their book value, except for an item of plant whose fair value was more by 6.4 million as at that date, the date of acquisition. Great. Anytime examiner is talking about the fair value, always fair value greater than the net book value. Book value. Remember that book value is the same as the carrying amount. That book value is the same as the carrying amount. So in this case, in the instances where the fair value is greater than the net book value, we say that is upward valuation. Upward valuation. Upward valuation. And vice versa is true. And vice versa is true. This will lead to, depreciation under charge. Depreciation under charge. Depreciation under charge. And how we get depreciation under charge? Depreciation under charge, you get that value, the revalued amount, which is 6,400. Let's eliminate these zeros. You divide by the useful life. I want somebody to tell me what is my useful life in that order. What is our useful life of that plant? What is the useful life? We have been told that we have the useful life. How many years? Useful life ilikuwa miaka ngapi pale? Umepewa 4 years, 4 years. So itakuwa ngapi? Give me the total hapa. Give me the total. Hiyo itanipatia ngapi? By 4 1 24 by 4 8. Is it? No, 24 by 4 is 6. 1600. I want you to note something. This is the depreciation under charge that I'm trying to compute here. Depreciation under charge that I'm trying to compute here. If this is my depreciation in that order, remember depreciation. Is it an income statement item or a balance sheet item? Depreciation. Is it an income statement item or a balance sheet item? Depreciation. Akamwambia Allah, we swali nipotee. Allah, depreciation, less expenses. Look at your income statement, my friend. You have revenue less cost of sale. You get those profits, value less expenses. Income statement item. It is an income statement item. And since we are looking at an item in our subsidiary, therefore, this should be prorated by 9/12. Now, the depreciation under charge to be accounted for is 1,600. 1,600 times 9/12. Remember, we don't prorate items of the balance sheet. So, itakuwa ngapi? Sasa tuone itakuwa ngapi. That should be our depreciation under charge, and I want somebody to remind me how it is treated. 1,200. How do we treat depreciation under charge? A great student should remind us here. How do we treat depreciation under charge? How do we treat depreciation under charge? Allah, it should be very interesting for us. And the cost of sale, Asante sana. Yes. This 1,200 will be added to the cost of sale. It will be added to the cost of sale. It will also affect another item. It will affect the PPE. Asante, you rest the PPE. You rest the group PPE. Thank you so much. Hiyo tumemalizana nayo. Sasa class. This one nilifanya nianze mwanzo hapo, and I wanted us to compute the goodwill. Should we proceed with the goodwill? Should we proceed now to get the goodwill of this question? Should we? Should we proceed to compute the goodwill? Let's proceed to compute the goodwill. At least now you know how to compute the depreciation. Now, how we compute goodwill? Goodwill computation. Goodwill computation. This is very important. I want everyone to concentrate here. I want everyone to concentrate here. Look at additional information and tell me whether, we have anything to do with NCI. To prepare NCI somewhere so that we know the method that we shall use. Because prepare. Any NCI? Yes or no? Tumeambiwa hapo sawa on that first line included in the accounts receivable. Goodwill is considered to be impaired by 25% as at 30 September 2012. Goodwill is impaired, classified as admin. So now, so we are going to use the partial goodwill method class. We are going to use the partial goodwill method here. I want you to understand today, the objective of today's class is to understand how we compute the goodwill. Is to understand how we compute the goodwill. How we compute the goodwill now. How we compute the goodwill. What is our purchase consideration? Sharing can be in thousand here. Sharing can be in thousand here. What is our purchase consideration? How much did we pay? How much did we pay to these subsidiary? Purchase consideration. Purchase consideration. Purchase consideration. Purchase consideration. Somebody, can you check the question? The first paragraph. The first information there. The first information there. Purchase consideration equal value. I would like you to give me that. 2560? Yes. The purchase consideration was 2560. I gave you the format of coming up with the goodwill. I gave you the format. Who can remind me my next step? Who can tell me my next step? My next step. It's partial goodwill method. We are using a partial goodwill method here because we're not given NCI value. The next step is to layer what? Layer net assets. Net assets are the date of acquisition. Date of acquisition. Net asset at the date of acquisition. And class, please remind me, when we talk about net asset, we are looking at which part of the balance sheet, which section of the balance sheet that will help us to get the net assets. The finance by the equity section. The equity section. Remember, equity section is made up of evaluation, reserves, and the ordinary share, right? Ordinary share. So, can you give me the ordinary share here? Ordinary share. What's the value of the ordinary share? Ordinary share capital. Ordinary share capital in GAAP. Give me the ordinary share. And this is for which company? Class. This is for the subsidiary company. And this is Zuri Limited. We're looking at the net asset for Zuri. What is the value of ordinary share? Thank you so much, Safari. And Safari must be very bright. Are you in our class? 4,000. If you can look at it very well, thank you so much. 4,000 is the ordinary share. Class, we have Blue Solution, you're doing a great job. Oh my. Next by internet. Amos, how are you? Are you now able to hear me, Amos Mungai? Alright. We shall overcome. Kitu muhimu, wacha kwanza tushike hii concept pole pole. Tuone vile itakuwa. So plus the other item that I'm remaining with here, it is the retained earnings. What shall we record as our retained earnings? I want somebody to guide me here. What is the retained earnings in our balance sheet for Zuri Limited? Retained earnings for Zuri Limited. Retained earnings. That hapa tumeona vizuri. Retained earnings for Zuri Limited. Retained earnings. Somebody to give me the retained earnings there. 16,800. If you can really see that question very well, 16,800 is the retained earnings. But remember, this retained earnings was done. This retained earnings was done at the end of the period, right? And what we need here is the retained earnings at the date of acquisition. Retained earnings at the date of acquisition. Before we acquired this company, how many months had it stayed alone? How many months was it alone? 3 months. Good. Asante. What? Very bad. Too bad. Too bad. Network inakataa. For the retained earnings class, retained earnings for Zuri Limited is 16,800 as per the balance sheet. And then we were to look at the profit. Look at the profit that it generated for that year. Profit is now in the income statement. What was the profit? You read that profit. Yes. Profit for the year. Because it was there. Equal nothing. How much was the profit? Yeah, okay. For Zuri Limited. Profit for the year equal nothing. Profits, reported profits. Profit 6,000, yeah? 6,000. But remember, the 6,000, it was profit for the whole year. Even for the 3 months that we had not acquired this company. Therefore, for him, tutaongeza add 3/12 of 6,000. Before we acquired this, at least we had generated some profit there. Your profit ni ngapi? Tutaongeza pale. Remember, it's not what, and make a bracket so that we don't miss it. What is the profit? Yeah. 3/12 over 6,000. Before we acquired it, it had generated that profit. 3/12 of that 1,500. Now the retained earning plus itakuwa hii. That would be the retained earning. Add for me 16,800 minus 6,000 plus 1,500. Itakuwa ngapi? Itakuwa ngapi? 300. Thank you so much. So our retained earning will be retained earning at the date of acquisition. At the date of acquisition. At the date of acquisition, the retained earning is 12,300. With the total, give me the total here. Give me the total here. The total net assets. How much is that? And if you've not joined our sessions, 2,700. If you have not joined our session, feel free to talk to us. Rules of 719, 525,000. Not to join our session, feel free to talk to us. But we have both our morning session and evening session. And then you ask yourself, You ask yourself, how many percentage did our parent limited acquire from Zuri Limited? Which percentage did our parent company acquire from this subsidiary? Which percentage? 80%. So we get to find 80% of 22,700. What is 80% of 22,800? 22,700. 80% of 22,700 ngapi? 80% of 18,160, and that is what we are left in there to get now. Get the goodwill at acquisition. Goodwill at acquisition. Goodwill at acquisition. What is the goodwill at acquisition now, class? Acquisition. Wakati wa kuchukua kampuni 2,400, and then I send you to additional information number last. Additional information number last is talking about the impairment. Goodwill is considered to be impaired by 25% as at 30 September 2021. So impairment of goodwill, this goodwill will be impaired, it will be reduced. The value of this goodwill will be reduced. So impairment of goodwill. Impairment of goodwill. It is 25% of 2,400. 25% of 2,400. Ingapi? Sorry. We are just about logo. 25% of our 2,500 Igapi. Give me that. I hope you know Ghana. I hope you was sour better. It's 600. It's 600. So this one we less. Remember you less that. And then you get goodwill at reporting. Goodwill at reporting. Now, practically, we are able to see how goodwill is computed. How goodwill is computed. Goodwill at reporting. 1,800. And this is what you take to the balance sheet. Statement of financial what? Position. Statement of financial position. We shall be taking 1,800. What shall we take the 600? 600 class, the impairment of goodwill, somebody, administration expenses. Imagine, trying to solve this one, the come to solve almost half of it. Kufanya this one, come to solve almost half of it. So our objective today was to know how we compute goodwill using partial goodwill method. Remember, always remember that when you're using partial goodwill method, you must have this. This is a portion of what? We raise a portion of what was acquired by the parent company. I'd like to know whether we're together at that point. Are we together at that point? Are we really together? That is very good. Now I want to send you or to give you some tasks. In that question, please go and have the group structure. Have the question the way it is. Pick your parent company values. For the income statement, remember the income statement value is the one we prorate. Of course, the subsidiary items we prorate. For the balance sheet, never prorate. Balance sheet, never prorate. If you prorate, here is zero. Never prorate the balance sheet item. So if, for example, the receivable for the parent company is 2,000 and receivable for the other company is 1,000. You take 2,000 plus 1,000. You don't say 2,000 plus 1,000 times 9 over. For the balance sheet, we don't prorate. Never prorate in the balance sheet. The item that will go in the balance sheet prorated. The item that will go in the balance sheet prorated is 1. Nani anaweza ni gani? Naweza itaenda in the balance sheet ikiwa prorated. Na ina proratiwa on the other end. Which item? the depreciation undercharge. The depreciation undercharge. You see, the 1600 that we had times 9 over 12. Naona sasa hiyo 1200 tutaipeleka kule kwa balance sheet we less kwa PPE ikiwa 1200 ikiwa prorated. But balance sheet items are not prorated. Balance sheet items are not prorated. Balance sheet items are not prorated. That is marking the end of our session. That is marking the end of our today's session, having accomplished our objective of determining the goodwill of Zuri Limited, of which was our subsidiary company, and knowing how we treat the impairment. What we wish you is that you just do this coming August, you pass, and then you go to the advanced level together. You go to the advanced level together. In fact, good question. This is a compulsory question. This is a compulsory question. This is a question that you get in every paper. A question that you will get in every paper. So I would encourage you to go and try do that question. And then when we meet next in our next meeting, we shall see which other item we shall adjust until we finish up with that question. Don't forget to subscribe with us. Don't forget to contact our customer care and subscribe with that. We have a morning session, evening session, and we also have other materials that we provide, like revision kit and study text. Our charges are affordable, 3,800 for those who are taking, and 4,000 for those who are taking, and they have never joined us here. For any new students who is willing to join us here, you'll be charged 4,000 per unit, and you'll be added to a pay group where you'll be in a position to interact with the rest of the professionals, where you'll be able to run with us. Otherwise, that is it. I wish you well. May you all have a blessed afternoon. We shall meet next when we must. I have been your lecturer, Stephen. It's always a pleasure hosting you. Welcome to us here. We love Asante. Goodbye. Morning class in the evening class or vice versa. Yeah. No, if you choose the morning class, you just maintain. If you choose evening, you just maintain. But both classes are perfect. Whichever you want, you just tuliweka hivyo, sababu tulijua kwamba kuna wenye hawawezi wakitoka kazi saa 2 hawataweza kufanya nini? Kuingia. Sasa wanaweza anza mapema and then waende kazi. Wanaweza anza mapema 5 AM to 7 you're done. 5 AM to 7 and then evening 8 PM to 10. So it depends on your schedule and how flexible you are. Kindly liaise with the customer care. They will be in a position to guide you accordingly. Asanteni sana na mkuwe na wakati mwema. Goodbye.